Right, what's up, YouTube? The market is crashing, people are panicking, people are fearful, making irrational decisions. So I thought I'd make a quick video just to kind of give you some support and try and put you in the right mind frame, how to handle these red days and how to handle crashes. Okay. Now, first of all, it's normal in the market. There's always going to be crashes, reversals, pullbacks. It happens all the time. You see those return on investments that I was showing you, the 1,000 return on investment, 10,000, whatever. They didn't happen in a straight line. The things were going up, down, and the world continues to happen. There's going to be things that happen in the world that are going to affect the market. So it's going to, pull back, crash, whatever. There's always going to be that, and you need to factor that in. Now, if you came expecting that everything's going to be on an uptrend, you self-sabotaged. And if anybody told you that, then they ill-advised you. You are not going to be, do not expect to be an overnight millionaire. Look, patience, that's one of this is the discipline that you need as an investor, or even if you're going to be a trader. You need that discipline, patience. Right now, just like Warren Buffett said, the market is a place where money is transferred from the hands of the impatient to the hands of the patient. Right? Think about that. So do not overestimate. And one of the most profound things that someone said to me before is that do not overestimate what you can achieve in 1 year and underestimate what you can achieve in 5. Let me say that again. Do not overestimate what you can achieve in 1 year and underestimate what you can achieve in 5. If you are not going to achieve your goal in the few months that you've been in and this crash is happening, don't just give up and think, oh no, it's not going to happen. I was expecting this to keep going up and I was expecting to make my million this year, so forget it. Nah, patience. If money was that easy to make, everyone would be rich. Everyone would be wealthy. It's not. So again, if like they also say, if you were in doubt, zoom out. A lot of these coins, like the ones that I gave you, if you zoom out on the 5-year chart or whenever it was launched, you'll see that it's an uptrend. But in that uptrend, there's peaks, there's valleys, there's troughs. It's up and down, but it's a continuous uptrend. If you even had to kind of continue the pattern, logically you would see that it's an uptrend. Even a child would see that. So that's how you have to look at things, right? And even if anything, take advantage of this time to buy coins that you felt you missed out on, because they are probably coins that you wanted to get into but they had already run up. This is a chance for you to buy those coins. This is a chance for you to keep loading your bags and increase your bag. Dollar cost averaging down. There's a lot of things. There's a lot of things that you can do, and a lot of ways you can look at this market to your advantage. Remember, the best opportunities are found in crisis. Okay, so how would you manage a crash like this? How would you manage an event like this? Okay, well, let's go through a few things that I do when certain things like this happen, and I recommend to you. Pick a few that you would probably want to follow, and or just see how you would manage it, just to give you an alternative of how to handle these things other than fear and panic. Okay, now let's see. As an investor, the fear and greed index is one tool that you should refer to, just to kind of give you an idea of the market sentiment. Just to know what are people in the market feeling like. And it always kind of like lets you know how to act and respond to it, because like here we're fear. Should you be in fear if the general market sentiment is in fear? Nope. You should be smiling. You should be happy. Why? Because some of the best entries in markets are made during extreme fear and fear. Entry is everything in this game. Entry prices are everything. The better your entry price, which is like the closer to the floor it is, the bigger your gains are going to be over time. And sometimes if you get good entries, you'll never see your portfolio go red ever. You understand? So it goes like 0 to 24 is extreme fear. 25 to 49 is just fear, which is where we are now. 50 to 74 is greed. 75 to 100 is extreme greed. So just like here, when we're extreme fear and in fear, we can get perfect entries, and we should be not panicking with everybody else and be fearful with everybody else, trying to sell our coins and just trying to salvage the little that's left in our coin or whatever, and just turn the other way and run away from the market. We should be smiling because we're thinking like, ooh, a sale is coming. A sale is coming. Just like when it hits the 50 to 74 or 75 to 100, when every Tom, Dick, and Harry's in the market now, and everybody's overconfident and just throwing money in the market saying, oh, we're going to be profitable. That's when you should be thinking about exiting the market, taking most of your profits. Taking your profits. Because people are getting overconfident, and soon the market's just going to overheat and go back. That's the fear and greed index. Today we're in fear because I know there was some news from China about a construction company going bankrupt, big construction company going bankrupt. So there's some big people in the market, and the stock market is actually what caused the dump in the crypto market. It wasn't actually anything crypto related, but they are kind of coupled, the stock market and the crypto market. I can't wait for them to decouple, but they are kind of coupled, especially in situations like this, because investors are investors. Usually investors have percentages of their portfolios in different assets. So yeah, they are kind of coupled in that way. But that's the fear and greed index for you. So when you see fear and extreme fear, what are you doing? You're not running and panicking and pulling your hair out like everybody else. You go here and you see this red. Oh, red. You need to start to learn. You need to learn to love red. If you're going to be a shark, yeah. Because if you want to be a shark, when you see red, it's feeding time. That's blood on the market, right? That's what sharks do. They smell the blood and it's feeding time. That's how you need to think like. Because listen, crisis creates the best opportunities. I'm telling you, crisis creates the best opportunities. Don't ever let anybody lie to you. The most millionaires are made in bear markets. Yeah, people that have bought when the prices had tanked. When that bull market comes, they already got great positions. They're making money. That's how you need to think about it. That's how you need to look at this. And that's so, like, even if you look at this, right? So Bitcoin is 12%, 18% pullbacks, 15% for Cardano. Oh man, 30% for Polkadot. So even if you had bought it at a higher price, like just slightly higher, you shouldn't be thinking to yourself, well, I've already got some. No, buy some more at a lower price, so that it's called dollar cost averaging down. You keep buying as it goes lower if it goes lower. Because now you reduce your entry price, your average entry price comes down, which means that, again, you increase your potential return on investment. That's how it works. So all these sales, this is what you should be looking at it as a sale. If you pass by a shop where they had your favorite pair of shoes or whatever, and it was like 15% off or 20% off, and you've always wanted it, why? And you have the money, why are you not going to buy it? Which brings me to another thing. You have to try and always have some money on the, in USDT on the side, even in your bank account or whatever, if you're buying directly from your bank, because of days like this. These opportunities have come, and if you've got money, then you can just stock up and load up. That's how you make money and how you become successful in this. It's the discipline. I know it's easier said than done, but at least you know something to refer to when you need to see how you can plan and work around these things. I mean, this is what it is. A lot of people are buying these dips, and we're making sure that we keep our profiles stacked and ready for profit, like whenever, because these coins are gonna go up. The only reason I would say you can sell is if you're in a crap coin. If you're in a crap coin, sell, and then take the money and buy and put it in some of these good coins. That's how you're supposed to play it. That's how I see it. Because There's no need for you to be holding on to stupid coins, because some of these crap coins, when the market tanks, they never make it back out. They never make it back up. So that's the way you should be looking at red days. And also, just as caution, don't catch falling knives, because you see these it's the price is tanking, and then you think, oh yeah, no, it's tanking, and you're doing what I'm saying about buying as it goes down, and then you start putting all your money, just because you're thinking that it's the bottom. Nah, it's not always. I would always recommend that you just put a bit at a time. So if it goes down a few percentages, if you've got 200, buy 50 pounds of it. If it goes another little bit down, buy another 50 pounds of it. And then you at least wait for it to now find a bottom, and then it will find a bottom when it starts going sideways. It's probably ranging between a tight little price space, and then you buy the rest. That's how you do it, right? And listen, another thing you should do is learn to zoom out. When in doubt, zoom out. What is that? This is like 5 years of Bitcoin price action. This is 5 years. It's gone up. Look, it's been going up. It's been going up. If you had to complete this pattern, there's no way you're just gonna tank this pattern to the bottom. You are gonna know that it's been going up. But even when it's been going up, look, up, down, down, sideways, up, but it's generally going up. That's what you should look at and to console yourself and know that, okay, this is a market think about it. Why would you sell an appreciating asset? You're holding it. If you're not leveraged or you're not in a crap coin, why are you selling it? If you leverage trading and you see that things are going bad, yeah, you can sell and take whatever you have left, because then live to trade another day. But if you're just holding it, why are you selling an appreciating asset? It doesn't make sense. So again, those are the things that I just urge you to do and look at when you are when there's red days like this. Do not panic, stay calm, find opportunity. Best opportunities are found in crisis. I'll say that again. So I think that's all I can that's all the advice I can give you, and just to kind of that's how you develop your discipline to deal with this market, because there will always be days like this. Then there's not always, but there will be days like this, and some can be worse. These assets can sometimes even dump 80%, and when they do, hey, better entries for us. That's how you should be looking at it, and switch off the news too, because the news is always going to be spewing some overly sensational stuff. Switch that off. Don't even try and listen to it, because listen, if you want crypto information, the mainstream news is the worst place to go and get that for. They almost don't know what they're talking about, and some of them, remember, are basically mouthpieces for the corporations that don't want you to be in crypto, because they are losing their clientele, which is us. Those are the same people shaking us out of these coins by dumping on us and creating these large wicks to try and make you panic so that you can sell your Bitcoin, and they end up buying it. So don't listen to mainstream media for that. Go to at least some crypto YouTubers, whether it's me or, whether it's BitBoy or whether it's anybody else that that is out there, Carl, Chris. Those are people that know the market. They studied it. These are the people, whether they're hedge fund managers for these stocks. Don't listen to them. They hardly know what this is about. So don't listen to the news, because those news reporters and those news channels are their mouthpieces of the same people that you're trying to break away from. Right? And don't listen to people that don't know nothing about this, because they all think that if they bought into the mainstream media narrative that this is a scam, what good are they gonna? What good are they gonna? Tell you. Some of them just want you not in it as well because they're not in it and they just need some company to just stay out of it so that they don't regret if it does go up. They're always gonna feel like they had someone else to kind of like, you just don't. So once you've done all that, you've checked your greed index, whatever, you've zoomed out to kind of console yourself, you've checked out, maybe you've bought some at the dip, just do something else. Find something else to do. And just switch off from this. And stop stressing. You don't have to keep stressing all the time about this because it will give you a headache. The only people that should be sweating are people that are leveraged. I've been there. I know about it. And I will talk about leverage trading in one of my videos soon. But yeah, I think that's all I have to say today. And I hope that anybody that was panicking, at least somebody that was panicking took from this and got their confidence. And yeah, double-digit dips are for scooping. So yeah, I guess that's all I have to say. This is Titch for Block Smarts, and I'm out. Peace. Take care.